Yes, we are live. Good morning, team. How is everybody today? Did you have your seatbelts on over this violent weekend?
Yeah, it's I woke up European morning and everything was looking pretty horrific. And then as we've gone on with the day, America's come in, bought. We just don't know how to buy the dip here in Europe. That's the issue. But yeah, it's seemingly getting better as the day goes on.
Yeah, one of the things I noticed, because I began my career over there, but sometimes Europe waits for the US to react.
Oh, 100%. 100%. Monday morning, everyone's having a cafe in like a restaurant. Like you can just chill, wait for the US to come in, decide what to do.
Great stuff. Thank you, Manda. Marty, we're going to talk with you a bit today about market manipulation and how stuff actually goes down. So
Sure.
I hope you're ready for that too. You're doing well this morning?
Yeah, I'm doing great. I did the play-by-play yesterday. It was epic for the whole thing. Watched the futures dump, which led to the whole move. And yeah, it was epic. I think a lot of people got a good entries if they followed along. Learned a lot, but we'll talk about it today. Thanks, guys. Nice to see you all.
Exactly. These dips are for buying. I actually bought a little something myself this morning. Was waiting and, was waiting for the plan. And I think a lot of people do. CTO, how are you this morning? And did you have your seatbelt on?
Oh, yeah, absolutely. Maybe I can start by sharing the screen.
Absolutely.
So what we saw this morning is this huge dump in stocks, primarily tech stocks. We'll talk about that. You see this candle here. It's like a huge dump candle. And if we look at Bitcoin, it's basically exactly the same candle that we have on stocks. So I think that there are two factors here. It's the dump in stocks here is really driven by the tech stocks, and Nvidia has been really leading the dump here, completely falling off a cliff below support. And I think people got a little bit spooked by the DeepSeek, the Chinese AI wonder that seemed to come out of nowhere, and suddenly people are thinking maybe we don't need to buy so many and much Nvidia hardware. Perhaps it's possible to do it cheaper and faster. And I mean, I have a lot of experience with that from telecom. Of course, if you spend 10 years researching something, it's possible. It's much easier to do it when someone has already invented it. And Chinese companies are often very skilled at that. They can take some existing technology, improve on it a little bit, and do it at a fraction of the cost. So that, I think, is what spooked the market here, because everyone knows that. And I think that led the dump. Then looking on Bitcoin, I think that's half the answer. The other answer is what we talked about a couple of weeks ago here, that Trump came in now, did extremely bullish executive orders, like basically everything that everyone's been waiting for over 4 years, like stop the regulatory oversight, give clarity to all the players, stop the CBDC, and basically everything here, everything, and do a working group to see if should do this stockpile then, the strategic reserve. So basically everything came out almost that everyone hoped for. But then people also expected unicorns. They expected Donald Trump get onto a unicorn, fly across the sky, and buy up the price with America to go, basically. And then he didn't do that on day one or day two. So then the market dumps. That's basically the psychology of markets, and that's all there is to it.
Yeah, it's a classic buy the rumor, sell the news. Let's jump into our little agenda today. This one's called Violent Swings. We have a lot of ground to cover. We'll talk a little bit about on-chain and how retail has arrived to Bitcoin, which is very exciting. We have to talk about the EOs, the Strategic Bitcoin Reserves, Saylor strategy, Fred Thiel's strategy from Marathon, etc. It's crazy the amount of executive orders and rescissions of rules that have gone on, how the change of leadership is stunning across the board. And we have to talk about it because it does impact our bags. That's why we talk about politics. So I hope people are not offended. Marty, we'll go to you as well. We'll talk about market manipulation and how you can see the liquidity layers and where they're going to drive the price down to and how they do that. I've explained this many times for years and years, and people still don't quite understand that you are a victim to these manipulators. We'll talk about, we've got to talk about DeepSeek and Kimi. And some people say, oh, it's a nothing burger. But other people that are in the know say it is very profound, very, very profound. We'll try to get to the bottom of that. We'll talk about total dominance. We'll talk about where the developers are going. We'll talk about the poop coin landscape. And this other one that's very interesting out of France, I call it Unrealized Capital Gains 2.0. And what else? We'll wrap up with what we'll have to look forward to this week and how that could impact the markets as well. Sound good, everybody?
Sounds good.
All right. First of all, retail has arrived. First story, anybody can take this. But Bitcoin wallets from Cointelegraph here, holding at least $100, have grown 25% in the last year, reaching $30 million. So this is kind of not expected. I didn't expect retail to come in with, 6-digit Bitcoin. I thought they'd just be YOLOing into meme coins. Mando, any perspective on this? Have you seen retail arrive?
Less so. Honestly, I don't see retail coming in and buying Bitcoin. At least not from the people talking about it. They're often buying meme coins and stuff like this. This is a very bullish piece of data, because I think we've been talking about the idea that Bitcoin is at risk here from actually having a reduction in wallets, right? Like basically it being owned mainly by the ETFs or by sovereigns or by super wealthy individuals, and that could lead to a reduction in the network's strength. So I saw this, and I think that's very, very bullish. It kind of matches what I think we've already seen in like other chains, so things like Solana and maybe Base have seen huge growth in active wallets, and again points to a much broader base strength in Bitcoin. So I think adoption is only going up at the moment. Even if macro goes up and down, it feels like number of wallets at the moment is really, really picking up pace.
Yeah, awesome. Marty, any thoughts on
Yeah, I mean, there's a couple of things when it comes to retail. First of all, I've been telling, we know we've gone through the heaviest quantitative tightening era in pretty much history. So people don't have a lot of money. I think I've been saying this is the institutional round, the last 12 months. Really, this is the institution's time to accumulate. But I think retail doesn't have the money they had sort of in the previous bull run. But that's about to change. I track balance sheets. I track, money supply. And, Raoul Powell, we're all aware of what's going on. We're just about to go into, I think, the greatest quantitative easing event in the history of the US dollar for the last time. And so, I think institutions are scrambling to accumulate assets, tech stocks, crypto, everything, because once that money gets dished out to the world, there will be an explosion in asset prices, I believe. So I think right now people don't have as much money as they would like. We know that there's 7 trillion in the money markets, but I think retail is a little slower to come in this time because money is tight. If they have access to credit, they've used cheap money, but not many people have access to credit either with the high interest rates. So they've kind of designed the system to get to where we are now for an institutional accumulation, retail not to have the liquidity, and then they're going to introduce the liquidity and go into distribution where they resell all the assets to retail at a higher price. And that's just the way the game is.
And we've seen other markets as well, like China. People's Bank of China have been flushing the market with liquidity over the last 2 months or so. But Europe and US is different. CTO, what are you seeing in the tea leaves there regarding retail investors? Or is it still the treasuries? Is it still the ETFs that are buying everything?
I feel a little bit like Mando said, that I see much less retail interest if comparing with previous cycle tops, at least. So, I mean, for me, that's actually bullish, because the day where everyone is talking about buying Bitcoin, that could be the top, when the last person has bought. And I don't see that here. I feel that those who are talking, they're mostly talking about some meme coin.
Yeah, exactly.
Exactly.
I've got 2 screens going here. Okay, let's go to the next topic. There's so much happening. The executive order, I'm going to blitz through this a little bit. I'm going to go through a couple of slides and then we'll summarize where we are. But the revocation of the EO 14067 was big. And all of a sudden, instead of digital assets becoming a security threat, they've become some type of protection mechanism, which is super interesting. The stockpile, the 198,000 Bitcoin that the US government has, the Biden administration did not sell it. We were worried they would. They didn't. This is going to roll into maybe, perhaps, that strategic reserve for the country. Also, Marty, as you are well aware, I've been counting the states since state 1, and then it was at 12 a few days ago. Now it's at 15 states. So these dominoes are falling fast. I don't know when they're going to start buying or allocating, or will it be 10% of pension funds, all that type of stuff. But that also is very large. And of course, you've got Saylor chiming in on the Strategic Bitcoin Reserve Framework on how it can help offset the national debt. And we saw this back at the Bitcoin conference. RFK did an amazing session on this one. But that's where we are. I'm going to start with you, Marty, first, because you're at the bottom. We'll mix it up. But tell me your perspective of all of these changes that happened in such a short window of time. Are they profound, or is it a nothing burger?
Yeah, James, I track the news. That's my job. I'm a crypto commentator. I'm here daily tracking the news, and I've never in my life seen this amount of bullish crypto-specific, Bitcoin-specific news come through the wire over the last weeks. I mean, during our last few shows. I mean, last week was just since when we ended the show, literally it just started an entire week of bullish news. Now, I understand from one perspective, that's fantastic for holders of assets, of Bitcoin specifically, but also a lot of people are going to go long. And so what I think yesterday was flushing out those longs on bullish energy. But the strategic Bitcoin reserve narrative is now stretched to 15 states. Kansas has now allowed 10% of their state pension funds to invest in Bitcoin ETFs. It's a snowball effect. Donald Trump, man of his word, signed every order we could ever expect, put David Sachs in charge, put Loomis in as the head of the commission. It's the most bullish Congress, it's the most bullish US Washington we've ever seen. So the next question is, how does it roll out? And I think Michael Saylor has sort of become the godfather of the recipe. And he laid it out. I mean, his writing was perfect. It makes complete sense. He bought 10,000 more Bitcoin in the dip. The man is truly letting everybody know how to do it. And it seems as if they're following suit. So we're going to have to see over the next week the repercussions of these dips, the fear. But I believe that we'll see all-time high in Bitcoin based on that bullish week of news and the strategic Bitcoin reserves having to accumulate Bitcoin. I would say under 250,000. I would say accumulating under 250,000 is now the new mandate.
Yeah, that's crazy. I spent a lot of time looking at the OTC desk balances and what the whales are doing, and they're all stacking as well. So it's funny, if you look at the 10 Bitcoin and below, they're kind of selling. 10 Bitcoin and above, buying hard. CTO, what do you make of all of this news last week? And what does everybody in Europe think? Are they mad in the US?
Yeah, I've been really upset actually with the whole European culture. I rant maybe too much about it, but yeah, it's like Europe, sadly, my home where I grew up, they haven't got it. The leadership, they haven't got it. The culture just isn't there. It's like this meme, all the different AI companies are fighting over each other, and where is Europe? Nowhere to be seen. They're thinking, okay, let's do some more regulation. That should really fix it, right? And sadly, the culture of innovation and the culture of promoting innovation, promoting innovators, letting them take some risks, because innovation is disruption. You cannot innovate without disrupting something. And if you box everything in so much with the regulation that you cannot disturb any status quo, how can anyone innovate anything then? It's just not a correct environment. And I feel it's like delusional messages coming out from the European leadership, like, we can take over the disillusioned innovators from the US. No, they love it. They're very happy that they can finally get clarity and be allowed to innovate. I think Americans going to move home from Dubai and Singapore and places like that, and build companies in the US instead. And perhaps it has to get even worse in Europe before they actually get it.
Yeah,
and
like,
maybe need to change out the whole leadership and come with. It has to be like a Trump moment, almost like someone who seems a bit from the outside almost crazy comes in and changes everything. And it's not there yet, I don't think.
I distinctly remember in the 70s when the Japanese car makers came to the fore and they started displacing some of the incumbents. And the first 10 years of that were really bad. You know, Japanese cars weren't exactly the highest quality. And then it changed fast. And now we're in the same situation where everything is being made in China and the world is not ready. And nobody can move at the pace of Asia. And we'll talk about that when we get to AI in a second. Mando, what's your take on all of this goodness? And when are we going to see it in the price?
Yeah, I would say it's one of the most bullish weeks for Bitcoin and for crypto that I've kind of ever seen. I think Trump did literally everything that he could. I think bar him either changing the Fed's mandate, which I don't think he could have done, or breaching his ability. Because with an executive order, you can't spend Congress's money, right? I think he got in trouble with that in his first term when he tried to immediately build a wall. But this is the best thing he could possibly do, which is basically say, we can't spend your money, but we're basically going to we're likely now just going to confiscate the Bitcoin that we already have, and make sure that forms part of the reserve. And then they put Senator Loomis in part of one of the Senate subcommittees that will maybe enact this gold for Bitcoin scheme that she's been pushing. But you can't do that. He did the maximum he could possibly do day one. You can definitely see, as what CTO says, you're going to see a lot of crypto companies move back. I think A16Z said today that they're going to shut down their UK office and move back to the US. And there've been a lot of European countries courting these big crypto companies that, because of the lack of US regulation. Coinbase, remember, was maybe looking at UK and France at different times. You're going to see a lot of that. A lot of people decide, right, it's time to get back to the US. There was some light rumors again of capital gains, even benefits for US-based crypto. I think Eric Trump was talking about 30% capital gains for crypto outside the US and none for that inside the US. I don't know if that's going to be true, but you just have that feeling. There's that feeling in the air that the US is back, that it's really going to change its tone now around crypto, and that's probably where you want to be at the forefront of innovation. So I think you're going to see a lot of founders decide right now is the moment to start innovating in the US again. As far as the price is concerned, I think part of it is those sort of unicorn expectations that CTO was saying. Maybe it was a bit of buy the rumor, sell the news. I just think we're going to get rolling great headlines here for crypto. I don't even think this AI scare is that, on a micro level, it's not that bearish for crypto. On a macro level, because we have correlation to tech stocks, yeah, maybe that's what the weakness is. But if you kind of go through the blow by blow, like cheaper LLMs and more AI essentially at a cheaper cost, only really is bullish for like use of blockchain. So yeah, I think this is just a macro based sell off that we've seen this morning, and it'll turn around.
Yeah, the other thing that I thought was huge, and that that was hinted at by. It was funny that the new guy comes into office the exact same week that Davos WEF cult party is happening, and some of the presentations from both Javier Milei and of course Trump, it kind of just kicked them in the teeth. I think that was the end of the WEF. No offense to any WEF fans here. I doubt there's any watching, but that was stunning. But this SAB 121. Every single major financial institution in the United States is now scrambling to custody crypto, build crypto payment rails, all that type of stuff. That cannot be understated. Now you got every holder of people's fiat scrambling over crypto. That is probably, for me, the biggest news last week. And that is massive.
I agree.
Yeah, and also this one, the vision, rates will come down, tax cuts are coming, and the US to be a superpower in AI and crypto. I mean, these are just big things that are going to affect the country and also put other nations on alert right now. Whether they react or not remains to be seen. Marty, you have any thoughts on this, how big it is?
I just think it's quite astounding that Gary Gensler is out on the 20th of January. They put Ayuda in as commissioner and Hester Pierce comes in immediately and with the stroke of a pen rescinds SAB 121, which is the most hard-fought Biden vetoed issue of all time, like literally with a stroke of a pen. That's how easy it was. So you can just see the action taken. It was just remarkable. And then don't forget BlackRock filing to have in-kind Bitcoin creations and redemptions, which was the other big, bloody nose on the ETFs. I don't think people understand this, that all Bitcoin ETFs, when they create and redeem the actual Bitcoin basket, they have to go through cash right now. Yes, this change allows them to send and receive Bitcoin on-chain. So it creates transparency. It's much more true to the Bitcoin ethos. It puts companies like Coinbase into a little bit of a strange situation because their monopoly on custody will now be dispersed across many other institutions. These changes, they might have gone under the covers of Trump. These are massive changes. That happened last week.
The in-kind redemptions, once that's done once for things like Bitcoin, it'll be done for everything, including the future ETFs like Solana. This is also huge. But the question I have is, I'm not a tax accountant, but immediately I'm thinking, okay, if it is in-kind redemptions, does anybody here know? Because you're basically moving an asset around, you're not buying or selling it, that doesn't trigger a tax event, does it, for capital gains?
I don't believe so.
Yeah.
I wouldn't know, but
we'd have to get a tax expert.
Like it's your Bitcoin, you're just moving it from one house to the other.
I don't know. Better check with some tax consultant. And can I just add one thing which is so significant to this list? If I can share the screen with just one second. Like, check the wordings here. Like, promote the development and growth of lawful and legitimate dollar-backed stablecoins worldwide. So it's like active promotion. It's very smart here because US dollar is the de facto standard. Nothing else. No one cares about euro-backed stablecoins or Canada dollar-backed stablecoins. USD has the monopoly practically. And then instead of trying to shut that down that the previous administration did, it's so dumb. You kind of built the monopoly almost. Why try to shut it down? You should promote it instead. And that's exactly what they're going to do. And they're going to protect Americans from the risks of central bank digital currencies, CBDCs, which threaten the stability of the financial system, individual privacy, and the sovereignty of the United States. So check these wordings here and compare with how it sounds from, for example, I don't know, European Central Bank or something like that.
Marca.
Yeah.
Absolutely.
Yeah.
I mean, this plays perfectly into the entire thesis that stablecoins, potentially are going to be larger market cap ultimately than Bitcoin. And investing into the networks that move stablecoins is really the move. The digital dollar is here, guys. It's going to be in the quadrillions.
And by the way, before I forget, everybody, all the channels are below. Whether you're watching my channel, CTO's channel, or on X, on Mando's, or Marty's, please subscribe to these fellows, unless you haven't already. It's probably unlikely you haven't, but Mando has Mando Minutes, his great newsletter. I subscribe to that, but that's from day one. CTO Larson website, channel, Twitter, lots of fun postings, some spicy ones too. And Marty Party, 24/7 posting like mad about everything crypto, macro, money, manipulation, limits, layers.
Actually, James, did you guys see, Mando, to your point, Coin Market Cap and CoinGecko on the weekend released a category filter on their main pages for US made crypto?
Wow. I didn't see that.
Yep.
I didn't see that.
You can go on their main pages.
So, some people
everything's on there except Ethereum. Doge is on Coin Market, but not on CoinGecko's list because it was co-founded by an Australian and an American, and the rumor is Palmer deployed it in Australia. But anyway, that's one thing. But you should go through that list. It's really interesting. And then this was great. This is great.
Made in USA. I call it the poop coin landscape. Is that what you're referring to, Marty?
This is a great. I love this chart. This is just brilliant. This comes out of CryptoRank.io, great website, guys. Go check it out. But look what the wonderful job they did. they've created a chart just showing the subsets of crypto and where they fit. So what Grayscale is made a trust for, the Coinbase 50 index, made in American cryptos, and then obviously Trump's son's World Liberty Financial. And you can see it's very interesting. You can go through there and really get a sense for how this is playing out. I think this is just a great token landscape, but you can see Link is actually the one that sits in the middle that is in all of these.
I was just going to call that out. Link is definitely an interesting position here on the chart. And also, years ago, I think in 2021, I made a video about how outrageous all the Grayscale trusts were and how you should avoid them like the plague. You know, massive premiums on assets.
You can see sort of the pushing out of the foreign coins, sort of TRX, ENA, Tau. It's a very interesting way of looking at it. I thought this was great, and I'll continue to share these. These are great from CoinRank.
Yeah, good. Let's get back to what really shook up the markets. Let me figure out what slide it is, because this is the big story. I'm going to go through a couple of quick slides here because it shows you how risk assets and crypto are interrelated. So we have, first of all, we had DeepSeek come in, rattled everybody's cages. Half the world says it's a nothing burger. I remember somebody on a Tesla channel I'm on, they said CCCP means copy,
paste.
Paste, yeah. Chinese could copy paste or some funny acronym. I thought it was very funny. But these are open source models. So DeepSeek came out and it smoked a lot of the incumbents at a fraction of cost. And then right afterwards, Kimi came out. This is from the Kobesi letter. DeepSeek is 90% cheaper to manage. The cost of OpenAI is $60,000 per 1 million tokens. And DeepSeek is $2. That is pretty staggering delta. And we'll talk to CTO as well and Marty about the open source nature of this, because I remember 2 weeks ago, we had the same conversation, Mando, that the AI in crypto is so easy to replicate because it's open source. It's very difficult to invest in. Every 2 weeks, different kettle of fish. And the VCs are also stuck by this too. Now, this guy, I trust in the space. Now, he said something very profound. And for the people out there that say, oh, DeepSeek is nothing, no. Listen to Marc Andreessen, okay? Not only does he know technology and the space, he's the guy that built Netscape back in the day, or funded Netscape way back when, I remember in the 90s. DeepSeek R1 is AI's Sputnik moment, okay? This is huge for him to say this. And then he said, DeepSeek R1 is one of the most amazing and impressive breakthroughs I've ever seen, and as open source, a profound gift to the world. Again, he's saying this, and he's got AI investments. This is cannibalizing his investments, and he says it's profound. I'd love your thoughts on this. I'm going to go to you first, Mando. This is huge.
Yeah, I think you can break down this into two things, which is clearly the model, which is now has been open sourced. I think you can sign up for it, though I've seen in the last hour or so they're only allowing signups from Chinese mainland numbers. So maybe you've already missed the boat, but it did go to number one on the App Store for a short period over the last 2 days. It's clearly a very good model. There's no really denying that. It's done head-to-head tests with the O1 reasoning model from ChatGPT, which is, they've always got new models coming out. ChatGPT, arguably, they say they've got they're meant to be releasing one for the last few months. So we don't know where they're at right now, but it's definitely comparable. And there've been some changes basically to how they do inference to get there. And then the second thing is the validity of how they got there. I think that's the bit that people are questioning more than the actual model itself. So it's, did they really do this on kind of the budget GPUs from NVIDIA due to the restrictions on some of the latest models that they could get to China? Did they do this for a fraction of the cost? What is the ongoing running cost of this? Will it be able to deal with the same continual training that some of the other models do? That's the bit I think has been the more that's been challenged here. Is is this actually been done at that cost? And I don't know. Genuinely, and I don't think many people know. It feels like something we'll probably get a better sense of in the coming weeks rather than today. But today, everyone is shocked by the model, and there has been some reaction to this far cheaper way of doing an LLM. Now, the number one issue for this, if you take them at their word and they have done it for that, look, Nvidia does look slightly exposed here because people have been spending billions and billions of dollars for these GPUs, and arguably now that calls into question the huge capex spend that you've seen from the Magnificent Seven, of which has already been a bit of a show me story. We've spoken about on the show. Like, there's been a lot of questions: is this going to lead to revenue? Now it looks like the cost may have been way too high. At the same time, I kind of just feel like demand will just increase to meet the supply. Like, I don't think these are going to be idle NVIDIA GPUs. Like, I think what we'll end up just doing is speeding up the process towards AGI and beyond, right? Like, what I really just think is suddenly now we have some more capacity in the system. Now, that does bring down the cost down, and that could challenge NVIDIA's current market cap. But what this really just means to me is more AI. It means that a lot more people can get involved.
I'm going to challenge you on that, though, because Elon Musk spoke to the fact that there isn't enough real-world data anymore for learning. So the world is now scrambling either to create synthetic data or get access to real-world data. And Tesla has the most real-world data around driving, and X has the most real-world data around kind of live chat around the planet. So
the data becomes a more limiting factor, whereas before it was GPUs. Right, yeah. That's a different thing. But whereas before is that we couldn't get our hands on enough GPUs. Now maybe if they come cheaper and we get to do these models better for cheaper, that allows for a lot more innovation, which is, I think, generally a good thing. Like, maybe it's not good for NVIDIA if you hold NVIDIA right now, or maybe that's being challenged. I know even with everything stabilizing, NVIDIA continues to go a little bit lower in terms of the stock market right now. But yeah, the follow-through impact for me is really just that suddenly now, which is an innovation that we needed, right? This is actually good that suddenly this could be much cheaper. Yeah, it's come out of China, and we should all question. Well, it should be questioned because there's a lot of benefits, I think, for China, like probably sandbagging these figures and being like, well, we actually did it for much cheaper, and because they know it will cause some damage. But if they did it, and this is clearly a great model, and I do think that we're going to continue to see this sort of innovation.
And I think Andreessen knows what he's talking about. CTO, Era Digitalis, tell us how this impacts everything for us. Does this accelerate the disruption?
It will for sure, yeah. So if I can share the screen again. So, I mean, this is a good thread. And I mean, they've done a number of legitimate innovations here. So I'm not, throwing dirt on this in any way. They've done legitimate innovations. For example, they introduced this experts concept that you have like experts. It doesn't work like that, but say a doctor, lawyer, and engineer. Perhaps they don't need to be active at the same time when you're solving a problem. So instead of having like 1.8 trillion parameters active all the time, you can have similar magnitude, but only a much smaller number active at each point of time, because maybe you're asking a medical problem. The lawyer doesn't need to be active, if I kind of simplify it like that. And then that results in mind-blowing if cost savings. So training cost drops maybe factor 20, GPU needed drops factor 50, API drops by a 95% cost, and so on and so forth. So there is legitimate innovation and legitimate savings here. But I think exactly like Mando, I think that will be translated into improvement, like a better quality. I think we're going to fill this up with even more hardware and be able to solve even more problems cost efficiently, because that's one thing that hasn't been discussed at all. Like you go to ChatGPT and it feels like it's free. Now I saw someone said in the comment, but DeepSeek is free for everyone to use. That's not going to be like that. Nothing is free like that forever if they cost money. So, and that hasn't been discussed. Like AI maybe can do everyone's job, but if it costs 100 times more, they're not going to do it. Like it can be theoretically maybe solve the problem, but it's so computation intensive to do it that in practice it doesn't make sense. But efficiency like this means that AI will be able to address more problems cost efficiently. And like these examples here that showed like these good ideas that they've implemented, yeah, probably ChatGPT or OpenAI and XAI and everyone will take the good ideas and adopt them. And I think it's good also that there's some competition coming up, because OpenAI had a little bit of a monopoly here. Of course, XAI came in a bit, but it's been pretty much one company monopoly. Now it's going to break up more. I do think that there is a little bit worrisome for NVIDIA, this kind of development, short term at least, because I do think, exactly like both of you said, I think people will review their CapEx spend one time after this. Right?
I remember Microsoft was boasting that they're going to spend $80 billion on data centers. The Sam Altman guy, who I do not trust, never did, never will. And I always felt that Microsoft and ChatGPT were going to fail. They were going to be destroyed by XAI. This DeepSeek and Kimi were not on my bingo card. Marty, give us your technology perspective. How disruptive is this? And who's going to hurt the most? Is it going to be AI tokens on crypto or Microsoft?
I think DeepSeek, I agree with Andreessen. I think it is a Sputnik moment. This is a bigger thing. People have not really grasped all of the sort of axes of change this introduces. First of all, cost efficiency. It cost them $6 million to train their model. You know, that's a fraction, 100x less than any of the other AI companies. Its performance is equal or on par with the others. It's open source, like crypto, blockchain. Open source is a paradigm which sort of plays against capitalism. It makes things free. It makes the intellectual property free for all. And what does that do? Well, it reduces the monopoly of these tech giants, right? These sort of closed source, in-house, open AI, we're building something, you get to see what you see. This allows anyone now to build unbelievable AI learning models and innovate, which is just unbelievable, for free, okay? Much like crypto does. So it's much more on par with sort of the blockchain route. I'm a big open source guy. I have been since the 90s. And I'm very impressed that they came out the gate as open source. I think it's going to change the entire landscape. But then the other things are hardware agnostic, which means it can run on any hardware. It doesn't need the high-end T100 chips, which is why NVIDIA stock goes down, right? It's another breakthrough. But then I think Chamath actually wrote a tweet yesterday, and hats off to Chamath, who's in the game. He understands this very deeply. They've actually innovated reinforcement learning, which is the first time we've seen this, where the actual model starts to question itself instead of relying on external qualification and validation and curation. It starts to internalize its own reinforcement, which is literally the first step towards AGR. So they've come out with DeepSeek being typically the next evolution towards AGR in an open source package, run on any hardware, literally changes the game.
Let's get back to crypto, because that's why people are here. There's a funny theme, and we touched on it, I think, last week, maybe the week before. But David Sachs, his role within the government, his venture capital firm called Craft Ventures is deep into multi-coin capital assets, which is basically all Solana and Solana tokens. Have you guys been looking into this at all? And I know that David Sachs still owns Solana, and I know Craft Ventures owns a lot of what multi-coin capital own. Mando, any insight on this one? And the impact down the line? Like, he came out and said very clearly that the T coin is a collectible and it has no impact on the government or anything like that. I thought that was kind of weird. He was like very defensive.
I guess he's in a difficult position, right? Because he had quite a pro crypto venture fund before this and all that. What I would say is that this has made me really bullish on Solana. Like, after that was mentioned, like he's the person who's basically in charge of what becomes a national strategic asset, right? And he's been one of the very early investors in Solana. Solana's US based. If you look at that chart we showed before, it fit. It was in everything but being on World Liberty Financial's balance sheet, which, as far as I'm aware, World Liberty Financial is basically only really ETH, although they do have some Bitcoin, or EVM. I just kind of felt like on the back of that was the number one asset I felt was bullish. But we're obviously seeing now, after Trump's coin, a lot more serious people are considering even issuing coins. Like, there's a lot more conversations here about brands issuing coins, about famous people, sports teams, and I'd be very unsurprised if we continue to see this, like, week after week, new famous brand or person considers releasing a coin. I think before we used to get kind of low-level celebrity coins. After Trump, it feels like, LeBron may issue a coin. You may get a coin from Nike. You may get a coin from the NBA. Like, where does a coin like that trade? And I think they'll all be on Solana.
Yep, interesting. And on this particular slide here, Marty, some of this data you're aware of, I track it too. We saw an acute acceleration in adoption of the Solana blockchain in 2024, and that continues to accelerate. But now we are at 70% of on-chain transactions are done on one chain. 73.3% of all revenue is done on one chain, and Solana did 1.5 billion transactions last year. Anything to add to this? Because we also have another X factor, and Mert tweeted this last night. The highest number of developers we've ever onboarded to Solana, according to Helios Labs metrics. Now, what I always said is follow the money, follow the developers. The developers invest their time where they can get maximum return. And this is also a bullish sign. Any thoughts, Mando?
Yeah,
and then CTO?
I think to me, James and guys, the even bigger Solana news is that Circle minted last week alone 70% more USDC on Solana. I've been posting every single clip. If they do $250 million, literally 3 or 4 times a day, that is just remarkable. There's now $9.5 billion of stablecoin USDC on Solana, which, they're not doing that arbitrarily. There is a strategy and they're expecting something. I just want to talk a little bit about David Sachs. I mean, David Sachs is a primary investor in Multicoin Capital, which is a company run by Kyle Samani. He put out, ironically, on January 22nd, that's 5 days ago, the Solana thesis, Internet Capital Markets. You can go see it on Multicoin Capital. It came out of their symposium. This is the David Sachs, Kyle Samani thesis. And you should just go read it. Everyone, I urge you to go do it. I'll post it on Twitter after this so you can go and have a look. But it's all about Solana and the disruption that they see. And, it's about an internet capital market disruption. That's New York Stock Exchange, NASDAQ, CME, everything getting disrupted. Literally zero friction payments, disrupting Venmo, PayPal, Square, ACH, Wire, Zelle, bill pay, remittances, salaries, payroll. That's the thesis. Now, people can throw their hands in the air and say, yeah, what about my chain? What about my chain? The proof is in the pudding. Nothing else can do it right now. Okay? So this is the way it's going. How it's going to play out starts with the stablecoin revolution. The next thing will be stablecoin regulation. And then we'll start to see the announcements come in fast and brisk about all the adoption of Solana for all of these things. And I urge people to read this thesis. I'll put it up on Twitter. James, I'll give it to you guys too. But this is pretty much the David Sachs thesis. You can see inside the guy's mind.
It was huge. It's funny because basically, if you went back in time, one of the things I always look at the leaders of chains, because if they are a sociopath, stay away. And it's pretty easy to identify if they are. I won't name any names, but I've made videos on them. But guys that are really smart, when Toly came out, he said, I want to build a blockchain that replaces NASDAQ. That was it. That was a 2020 vision. And they're stuck to the guns. And these guys are saying the same thing. CTO, what's your take on all of this?
Yeah. So can I share the screen again? Because one thing that really stood out to me this week, because there is still like an element of competition. It's Solana versus Ethereum. The others. And the others are in one way or another connected to Ethereum, basically. A base is an L2 on Ethereum. And what happened here now is that I feel like Vitalik agrees with all the problems that we have talked about here. I think, James, you and I, we talked about it 3 years ago or something like that. That a problem that it seems like they've only now discovered is this, that if we go down to challenges here, he's using words that I don't even know, heterogeneity, but it basically means that if you have different L2s, the user experience is different.
Yes.
This translates into composability and user experience problems for developers and users, because each L2 becomes like a different experience. You have to bridge the asset into that L2, and then you do something there, and you have to switch network, and you go to some other ecosystem, and back and forth and so on. And it gets very messy, and it's not nice for the end user. And that's the situation that they got into now. And then this whole discussion is, how to try to get out of it. This is just a couple of days ago. And, it's discussing then technical solution to it. But I feel that this is not given the situation they're in, it's not a technical problem to solve even. This is more about interaction with humans and so on. And perhaps Vitalik was been one of the smartest people of our generation, who came up with the whole idea of smart, realizing smart contracts in a way that it was practically usable. Maybe he's not like the best person in the world to lead a huge number of people. I don't know. Maybe he is. Maybe he isn't. I don't know. But we haven't seen that brilliance. He's a brilliant programmer, no doubt.
He's all over
maybe
the place.
those are other skills, And now
they're
realizing this problem, which is more about people and less about code. And that's what Solana did right from the start. There is only one Solana. You do everything on Solana, and then basically the network behind you sorts it out. And that's it. Very simple to understand.
And the focus for any chain is to have a North Star, have a mission, very clear, concise. And ETH never had that. It was all over the place. It started with smart contracts. It was a general solution for everything, but without any particular target or destination. And now, Vitalik, I saw a tweet from him yesterday, and they're swapping it up. They're focusing now. We got to scale. We got to scale. We got to fix our blob problem. All of a sudden, scale.
Exactly. Now going back to, so I think they had good ideas some years ago, talking about charting and different ways to actually just scale it. But at the same time, they tried to solve another problem, that everyone have to be able to run a node on their laptop, basically.
Yeah.
And I always felt it's not really necessary. I don't need to run the Ethereum network on my laptop while I'm, writing a document or something. Someone else can do that as long as it's decentralized enough, it's good enough. And I think that's been another problem with this.
And Amanda, you flipped very bullish onto Solana and the Solana chain just in the last 2 weeks. You kind of moved from narrative to narrative, and you got very bullish on Solana. Where do you stand right now?
I think it got dragged down by this move in Bitcoin dominance, right? But maybe I'm just single-minded at the moment, but every headline I see, I do think is bullish for Solana. Like the stuff last week, I thought with that headline last week, we'd see Bitcoin dominance go down, just because it was not just talking about a Bitcoin reserve, it was talking about a broader crypto reserve. It was talking about US-based going to be the focus, which Solana is. It was talking about David Sachs obviously leading the choosing committee, essentially. And then also basically bringing in regulation that would mean more use of L1s, right? So I just felt like that was really bullish on Solana, which is on the back of Trump releasing his meme coin on Solana. And I've been thinking a lot more about that, actually, and just I think it's kind of, even if you didn't like it, it really does unlock massive amounts of token creation possibilities now. Like he did this token, I would say, in one of the more legally dubious ways of doing it. So I just continue to think that this is going to mean that it's kind of free reign for people to come in now and innovate with token creation with various different things. Like he did it from the US, promoted it himself, owns 80% of the coin, right? That allows so many different brands to be like, okay, well, we can come and really experiment here. And I think that will bring in a lot of different token creation ideas to the US. So in some ways, I think that's just as big. Although it's not the meme coin itself. It's the actual way that he created the token means that a lot of people can suddenly start creating tokens and feel like they are going to be okay to do it.
Exactly.
I think one concern that came up with Solana is the unlocks. James, do you want to address that? Because there are big unlocks coming up February, March, April.
Yeah, people have been scared poopless about this for the last 15 months. It's kind of insane. You've got companies like Neptune Digital that bought a big bag of Solana at 60% discount, which is related to some of these things that are supposedly going to unlock, but they're being bought by people that are actually going to hold them. They're not going to trade them or sell them. But when you when you look at the unlocks over the next 4 months, it equates to about 2.5% of the total circulating supply. Now, when you look at the unlocks and inflation, et cetera, from other tokens, that is literally a nothing burger. The actual daily volume can 3x consume that volume in a given day. So yes, there could be a slight dip, but it's going to be nothing major. It should not prevent people from being in the asset or accumulating. And I accumulate personally under $200 every time Solana hits under 200. So it's really a nothing burger in my perspective. Any thoughts, Marty?
Yeah, I mean, let's just start at the unlocks. The word unlock is just one of those words used to scare retail people. Let's understand the unlock just simply means a smart contract is releasing it, putting it into the supply. But understand most of these tokens are already bought. All the FTX tokens are bought. All of these unlocks are already bought, probably by ETF issuers. Don't forget there's 5 ETFs coming out on Solana. They all have to buy inventory. So they probably pre-bought all that at a discount. So they're not going to be selling. So thinking an unlock does not relate to going on the market. Stop that. No such thing. It's used against you. Stop falling for the trap.
Very well said. In fact, Marty, while you're on, I want you to talk to this most important thing, market maker manipulation. Walk people in very simple steps, how they hunt your liquidity and how they fill the bags, and the players involved, both Coinbase, Binance, and that other market maker.
I mean, firstly, this is not specific to crypto. This is true for stocks, equities, commodities. This is how markets work, people. Basically, the exchanges themselves can't sell on their own order books. That's illegal. So what they do is they simply send the assets to a market maker, and a market maker is like a hitman. They'll do anything for money. You send them assets and say, I want you to sell these on my exchange. They'll sell them on the exchange. You can say, I want you to sell them at this price. I want you to market sell them, whatever you want. So the way they move the price, which we call manipulation, which is actually legal, it's actually legal, it's completely legal, is they send assets to market makers. And it used to be jump trading, but jump trading is now kind of been, under the eye of the DOJ. And so it's moved to Wintermute. Wintermute is now the biggest market maker in crypto. And so they send the assets to Wintermute. Now, the beauty of crypto is we can see it on chain. Unlike stocks, we have no idea where the assets are moving. We can actually see the counterparties of each trade. So we can watch when the exchanges, and notably we know Binance has dominance. So if Binance is 90% doing this, they're controlling the market. Binance, Coinbase, Bybit, the big guys, they send the assets to the market maker. The market maker sells them on their exchange. Market sells them, dropping the price to whatever they want to liquidate the longs. And then at the right time, you'll see the exchange will send stablecoin to the market maker, and they'll buy it all back up. So remember, if you have $100 million and you sell $100 million of Bitcoin, the price will go down on the exchange. Everyone will panic. It'll go lower. You simply buy it back lower, and you have made more money and more tokens.
In
It's
fact,
very simple and basic stuff. This is how markets work.
Back in the day, it was funny because I used to track this, and the market makers used to dump all it took was about 8,000 Bitcoin. And this is when the Bitcoin price was like 20,000. They could dump 8,000 Bitcoin on the market and it would take it down 10%. And they'd immediately buy it back up. You could watch it happening. And it's not a lot of Bitcoin. And they're doing the same thing with all the assets. So everybody, the key here is have your limit orders prepared so they can't buy back the assets that they dump. You see here in your tweet, they are receiving stable coins to run it back up. So they dump it and then get stable coins to buy back more than they dumped in the first place. So it's something that we all need to be very, very familiar with as well. And these games happen.
With crypto, James, you can literally go on the chart, see the vectors, each candle move, and correlate it to a transfer to the market maker. It's that obvious.
Oh yeah,
it's unbelievably obvious.
it's as
And
clear
so
as
that's how
day.
it works. The whole goal, remember, there was $1 billion in 24 hours of liquidations yesterday. They made $1 billion of raw profit liquidating traders. There was also $1/3 trillion of gambling on crypto yesterday. Think about that, $1/3 trillion in one day. The markets are controlled by the casinos, by Binance and Coinbase. And everything they do is to make money in their casino. Now, at the end of the day, the asset prices eventually rise and their long-term goals might be aligned with raising the asset prices. In the short term, their goal is to sell longs, the bullish energy, the Trump energy, everyone's longing, getting greedy, run it up, trap people, liquidate the longs, shoot it back up so that no more longs can get in and take out all the shorts. Now they have more assets, more liquidity, less longs to worry about.
Precisely.
That's the strategy.
Exactly. And how that translates into the chart is very interesting because it's exactly like Marty says. So one very interesting observation in crypto is that you tend to get better results if you don't look at the chart except, like, for example, once per day, say at the daily close, because it's so common to get things like this. You see these wicks here, guys, everyone watching. So the wick means that price went down and then it went straight back up before the day even ended.
Yep.
And it's so common that prices run slightly below some key level, some support level, because most rational people, they will put a stop loss. Where do you put the stop loss? You put it below support. So they market makers and manipulators, just as Marty said, they will run it slightly below support, to kind of kill those, hit those stop losses, hit those liquidation levels, and then run it back. So if you just ignore all that and look the next morning, it's as if nothing happens. If you look at like daily close, it never went below support. It never went below support. Now we don't know how today will close. Of course, this doesn't work every time because it could also be that it's that exact time. It just keeps falling off a cliff. But on average, the results are actually better if not looking at the chart during the day, because of this factor that Marty says, because of the manipulation.
Yeah, absolutely. I mean, the best way to trade crypto, guys, buy spot at these flushes. Wait patiently for these dumps. Don't be afraid of dumps. Like James said this morning, first thing, look forward for the dumps. The dumps is when you buy. Hold, put it in self-custody. You don't have to worry. Okay? Leverage trading is only 99% of leverage traders lose everything. Don't believe the hype. Leverage trading is extremely tough. You will lose your money. The entire market is designed to flush you.
And they just
buy
went down.
spot, move it off the exchange, and forget about it.
So we actually, as we were saying this, there was actually a mini flush down to 99.5 where they were hunting a piece of liquidity, and we should go up from 99.5 right now just to prove live how easy it is to see what they're doing. But let's get on to one other agenda item before we go. That was, thank you for that, everybody, regarding market making manipulation. Unless, of course, Mando, you have anything to add to this topic?
No, I think we've kind of hit the nail on the head there. Like, market makers are there to take your money. That's just basically their job. They're actually often delta neutral.
Right.
So
this is funny, and we spoke about this back in 2024. People trying, governments who are desperate for money, trying to go after unrealized capital gains. And I thought this was very interesting in France. Vive la France, and all our French audience here as well. But the French Senate has approved 2025 budget, which includes unproductive wealth tax targeting assets like Bitcoin. I call this unrealized capital gains 2.0. By the way, Bitcoin just popped $500 just when I said, because you saw them hunting down the little liquidity bubble, got it, and then they moved back up. So it was funny to see that live. But what do you guys think of this, Mando, unrealized capital gains 2.0? Are the governments that all of a sudden have no money in the kitty, are they going to be chasing things like Bitcoin to tax them to death?
I mean, I just love this. This is classic what CTO was saying. It's like the EU just is not a leader in any of this sort of stuff. So they find new fun ways to regulate and or tax it. This is just like unproductive wealth tax. Like, how can we possibly drive off like a new innovative sector of tech quicker via something like this? And it's because a lot of the European governments are broke and they have to find new ways to get revenue. And obviously, the French government veered pretty sharply left. I don't know, but like this is classic Europe.
But do they get points for creative names? Unproductive wealth.
I mean, what does that even mean? It's like everyone else has been like, yeah, Trump has literally just gone on TV and said we want to be a global leader in two of the strongest tech fields at now, which is AI and crypto.
Yeah.
And France is with the same breath calling it unproductive wealth and taxing you on unrealized gains.
Yeah. CTO, thoughts?
Yeah, I mean, BlackRock CEO Larry Fink, 10 trillion in AUM. I think it's like, what is it? It's like 16 times Sweden's GDP or something. He thinks that all financial assets are going to end up on the blockchain. That's what he's saying. And then this government saying that it's some kind of scam. Okay, but you haven't spent 5 minutes trying to understand what it is. Or like if probably they're not going to listen to 4 guys like us, but maybe they should listen to Larry Fink. Maybe he has spent more than 5 minutes in finance in his life to understand this. And he thinks that all financial assets are going to be on the blockchain. Yeah. So how can you not see then the enormous opportunity? We haven't even talked about that AI is happening. What's going to be the money of AI? When the AI agent goes out to hire someone on Fiverr, are they going to log in on the French bank, Face ID, or are they going to use crypto? They're going to use crypto. So, I mean, they haven't spent 5 minutes thinking about it, and then they're going to introduce unproductive wealth tax instead. It is so dumb that I don't even know where to begin. And it's not only France. I'm not picking on France here. It's the whole mindset, basically.
It is. And it just scares the rich people. The bag holders all leave. They just go to Dubai or other place like Malaysia, you name it. I always say money gives you wings, and these people just chase the wealthy out of their country. We saw that happening with Norway. We saw that happening with Sweden. The UK, there's a millionaire leaving every 40 minutes. It's crazy. Marty, before we wrap, we're at an hour now. We'll try to keep this to an hour, everybody. Some great comments here, etc. And yeah, Arthur Hayes, be careful of him. People saying Arthur Hayes calling for $70,000 Bitcoin. He does this every couple of weeks, ladies and gentlemen. Mando, I see you laughing.
For 75k Bitcoin like 10 times in the last few months.
Exactly.
As a lot of people, right? I think this is something to remember. I think a lot of people have lost money either lever trading or in some of these rotations. I think the Trump meme coin's been very, very painful for a lot of altcoin sectors, and then this dump has as well. And their immediate move is to be like, right, we've topped. Yeah. I could only have lost money in a world where we have topped. And so you get these crazy bear predictions the moment Bitcoin moves down 2%. Like, a really good way to look at that is just look at stablecoin supply. Yes. Okay, just be like, okay, is it just hysteria right now? Or is it just stablecoin supply? Tether's stablecoin supply dipped very briefly because of all the Mika stuff at the end of December, just gradually heading back to all-time highs. 139 billion. It's up again today. Kind of tells you everything you need to know. Like, there's money flowing in to this sector week in, week out.
And Mando, that leads me to something. Like, you got people like Arthur Hayes trying to talk the Bitcoin price down. Do you think they're in short positions? And then you got Chamath saying, this AI China stuff is very bad for NVIDIA. And then he writes a whole paper on shorting NVIDIA. Do you think they're using their influence and power to try to talk the market down to talk their book, which is short positions?
Well, if Arthur Hayes has been doing it, it's not been a very good job, right? He's been talking about crazy shorts several times over the last 12 months, and they've never really worked. So I don't know if it's that. I don't know if it's manipulation. I actually think it's just that people get lost in like I think there's two ways to look at crypto. And sometimes we look at it from weeks where we look at it really macro and we're like, look, this is what's happening this week in macro. And there's weeks where it's like bottoms up. This is what's coming in. This is what we're building each week. This is like crypto specific stuff. And I think the stuff that always leads to really bearish takes is the top down macro stuff. And that's often what Arthur Hayes and some of these other comments, even people like Anson, for example, are coming in and being like, right, there's this macro thesis, which I assume I know. And that immediately I can just place onto crypto. And I think calling macro is incredibly tough. Like people do that like week in, week out. It's not just technical analysis. And I think that's where you get the most bearish predictions often. It's like some assumption that something crazy is going to happen in macro, which just derails everything. And it's very, very easy with macro predictions to suddenly start spiraling yourself and being like, and then Nvidia is going to go to zero. And then we're going to have this 2001 style takeout of tech stocks. And the US is going to like, and all of this is super bearish for crypto. And it never really happens.
Like 90% of macro experts called the worst disaster ever for 2023 and 2024 in the S&P 500. They were all wrong, because they didn't keep an eye on the AI revolution that was happening behind the scenes that drove the markets. Final topic.
Just final point is that like literally when Bitcoin was at 90K, there were continual, and I even said it in our group chat, everyone on my timeline was saying it was the cycle top, 75% chance of a cycle top. Then Trump released a meme coin and Bitcoin went to all-time high.
Boom.
Right? That was 3 weeks ago.
Yeah, crazy. Let's wrap up with Marty and you guys. Key events this week. We always try and forecast what's happening next. Bitcoin's at $100,200. We're back above 100K for the 18th time. But a couple of big things that are happening. First Fed meeting 2025. Why do we care? Because Jerome Powell will be under a truckload of pressure to cut rates. It was stated very clearly by T at the WEF. It was hilarious. And in news conferences too. GDP data as well. I think the US economy is mixed. Some areas are dead, like real estate, like automobile industry, etc., completely dead. And then we have PC inflation data on Friday. Marty, macro expert, what do you think of all this? Tell us what's going to happen this week.
I mean, in my opinion, from my research, we're in the exact same position we were in 2007. The interest rates were pretty much exactly where they are right now. Unemployment was in a similar position. The only difference was we had a substantially less money supply. I think that we're going to see similar results. I think rates are going to drop incredibly low. Starting on this FOMC meeting, I think we're going to see a different agenda coming from Trump. At Davos, he specifically said interest rates will drop. People asked him the question, will Jerome Powell do what you say? And in typical Trump fashion, he said, we'll wait and see. So I think we're going to see that. I think the hard part will be unemployment will probably go up. So unemployment up, rates down, and then they're going to print money, go into quantitative easing, and that's going to go into risk assets. I think it's going to be great for all bag holders. I think people that don't have assets will be in trouble and suffer the consequences. So the message for me on a macro level is buy assets and hold them right now. Do not fuck it up. Okay, we're sitting literally at the dawn of the greatest money print in history. We, in my estimates with my team, based on Janet Yellen, I think, dropping the ball and telling us they're going to print 70 trillion US dollars. Substantial of that's going to be digital dollars as stable coins and injected into the world economy. So be part of that revolution, people. Don't mess it up. Those people with jobs, yes, it's a difficult time. AI, robotics are going to threaten jobs, as well as the unemployment rate naturally will probably go up. That's difficult. But how to mitigate that? Put your money into assets.
Key mandate for Trump is to reduce inflation. That's the real pain point for the American voter. They want inflation to go down. If they print money, unless productivity goes through the roof, which is possible with AI, they can keep inflation in check. But a big part of
that's
inflation,
the balance. Correct.
Of course, oil. Mando, any final thoughts on that and your forecast for the week? And then we go to CTO.
The only other thing I would say is that even in this world, let's say that China has built this really cheap model. Is that a world where you think more or less gets spent on AI? If there's now this arms race between the US and China?
More.
My general sense is that what you've actually just seen is the Sputnik moment.
Yep.
And what happened after the Sputnik moment is the US decided to spend huge amounts of money on its space program and then put a man on the moon, right? So yeah, maybe this is a wake-up call. Maybe there's been overspending and we need to change. There's been a change of how some of these LLMs should work. And maybe it's very good that we get cheaper versions of AI. It allows us to use it in much different things. Does that mean we're going to spend less on it? particularly the US. I think the US just got a wild wake-up call potentially, and they're going to spend a ton more.
Yeah. And remember, there's Peter Thiel, there's Elon Musk, there's Marc Andreessen, all these guys who are in the know, and they know what it requires for the US to be competitive, have the ear of the leader of the free world, which is huge. CTO, what's your forecast for the week and AI and all this? What is your plan for the week ahead?
I think great insight by Mando on this point, actually. I feel, I mean, even as a user, I feel the same. I don't feel perhaps like pasting my code into DeepSeek at this point. And I think a lot of people will feel like that. They will feel we have to protect AI tools should be in America for Americans and so on and so forth. And we have to beat the Chinese. And I think it could absolutely become an arms race here, which will accelerate AI further. And between Asia and US and Europe will probably have conferences about how to regulate it. And that
CCP spying on you?
Yeah, I mean, absolutely. I mean, the AI tools, guys, that you paste stuff in, that is used later to improve the AI. So, don't paste things you don't want auto-completed later. In terms of the market, if Bitcoin closes here with another week below 100K, if it closes exactly like that, it will be an insanely bullish chart, actually. If we retest support level and it results in a deep week back up, that would be very bullish. As usual, I will try to react to what happens. If this kind of continues like this, I will be insanely bullish. If 90K breaks, if this starts looking like this, okay, I'm going to react differently. Then Arthur Hayes will be my hero, and I will start looking at different levels. But we're not there yet, guys. This still looks good, and I will take it from there.
Awesome. Final thought, and then we wrap, Marty.
Yeah, I think if you put the 200-day moving average on your chart there, CTO, I think, there is a 5%, I would say a 3 to 5% chance that they manage to flush the 200-day moving average, which is now, you can see there's your, I would call that the low number. Yeah. But I think it's extremely low probability of that happening. There is so many bar walls that I see on the exchanges at 100,000. You can see it bouncing off. They're trying everything. It's bouncing off that 100K line. So potentially they'll flush the 9999 a couple more times, but I don't think there's a high probability. Obviously, there's always a probability, but it's in single digits that they manage to flush that 200-day moving average. And remember, I just think it's fascinating. Can you guys imagine all the young developers around the world that downloaded DeepSeek open source libraries and are building AI tools right now? That's what's happened today. Everyone is trying AI. They're building their own variations. They're building their own LLMs. They're learning it. I think it's a radical day. It's a real Sputnik moment.
And just for perspective, Saylor just bought another 10,000 Bitcoin. That's 22, 23 days of supply, and the miners aren't even selling their Bitcoin. They're hodling now. So supply crunch is coming. With that, we've run late, everybody. We've gone over the hour. Sorry for keeping everybody so long. I want to thank everybody as well. Don't forget links below for all these different channels or wherever you're watching it. Follow us all, wherever you want to follow us. I want to say a big thank you to Mando, CTO, Marty, for the amazing insights that you will bring. We are a mix of people with different perspectives and different skills, but the cocktail is powerful. Thank you, team.
Thank you, guys. Brilliant show as always.
The audience as well.
Have a great week,
everyone.
Bye-bye.
Next week.